Hello there, this is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk a little bit about how there was a little bit of ray of hope, but now, unfortunately, the dark clouds of uncertainty lie heavy on the minds of the market. Plus, we have one of the big tech companies releasing its earnings report later today after the closing bell. And I want to discuss the implications of that and what that could potentially mean to the other tech companies. And of course, the ongoing saga, which is Donald Trump and his tariffs. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. With that out of the way, let's get started. So, in many ways, over the last 48 hours, we saw a little bit of ray of hope for the market. However, though that hope is still there, it's not, completely squashed completely. There is a lot of clouds of uncertainty still hovering and weighing down the market. Now, let's face it, since April the 2nd, the market has been on a real roller coaster. And we have seen huge declines on a lot of the US stock market. The Mac 7, for example, really since the beginning of the year, with this tariff trade war threat, has been really pushed down. They've had a terrible 2025 so far. And all of basically the S&P, the Nasdaq, who went on a bit of the Trump rally when he won the election, practically erased all of their gains, and even more so. And this was always an interesting thing, and that's why we did a video a little while ago on this, where it was called the Trump pump became the Trump dump, because it's literally what happened. And here's the thing. A lot of analysts, myself included, we all sort of thought that if the S&P got to a certain level, President Trump would jump in and try and put a little bit of calm onto the market. Because, he really looks at the stock market, or he did in his first term. But he didn't do that. He ignored the stock market. He basically said, yes, we are going to have a lot of pain to begin with, but it'd be worth it. However, there is signs now on whether or not Trump is beginning to feel the market again. Because, like I say, during his first term, Trump really treated the markets like a scorecard, a report to reflect success of his economic policies. This time around, he hasn't done that. But is there signs now that he is beginning to feel the market again and care about where the market is heading again and dictate his actions like he did in his first term? Because he was very proud of it in his first term, incredibly proud of it. When the market is soaring, he can't stop boasting about it. But he does care about it. Is there signs this time that now, at last, he's beginning to care again, like he did in his first term? Because let's face it, the market has really been driven. It's not economic data. It hasn't been for a very long time. It's all been trade-related. All trade-related headlines. That's all what's been driving the market. That's all I've been talking about on these live shows, is obviously Trump, tariff, trade war, Liberation Day. That's all that everybody's been talking about in the market. But again, let's start asking the question, is Trump beginning to feel again? By all means, there is sign that he's blinked. That's clear. But is it true, or is there real positive signs that he's beginning to feel? Let's go over the last couple of days since Monday. Now, we all know Monday was an absolute horror show. Horror show. Because, you know, Trump was very vocal. We did this last week. We discussed it in last week's video. He was very vocal on Powell. He wants to get rid of Powell, wants to terminate Powell, not happy with Jerome Powell at all, wanted to get him replaced. And there was talks on Monday that the Trump administration were looking at ways, how they could indeed replace him or fire him. This, of course, put the market again under more pressure. But Tuesday, because of this, all of a sudden Trump came out and he announced he had no intention of firing Powell. No intention whatsoever. You know, the fact that he called him a loser, you know, he called it, you know, Mr. Too Late. Said stuff like, I can't wait for his termination to happen. Well, sorry, no, his termination can't happen sooner enough. He had no intentions of firing, apparently, on Tuesday. As well as that, he even seemed to soften his approach with China. With China. Saying that, yeah, 145% is too high. It won't stay like that forever. I'm going to be nice to China. We're going to make a deal. And then for the market, of course, this is like music to the ears. There was much rejoicing. Much rejoicing. A, for one, he's not firing Powell. B, but there could be an end to this trade war. Is it a case that Trump is beginning to feel from the market again? Because on the back of that, the market experienced a 2-day rally. A 2-day rally. However, there is still murky clouds of uncertainty still remain. And at the moment, not dramatically, the market is beginning to stumble again. And there's a reason for it. First of all, there's mixed messages coming out of the White House. You know, is it tariff on, tariff off? Again, mixed messages. The other thing as well, this is why we shouldn't hang out the bunting quite yet. China is standing its ground. China actually said today, okay, that there was no ongoing discussions with the US on tariffs. No ongoing discussions with the US on tariffs. Then in the Ministry of Commerce, a spokesperson, I won't attempt this person's name because I'm terrible at names, but they said this. At present, there are absolutely no negotiations on the economy and trade between China and the US. They also went on to say this. If the US really wants to resolve the problem, it should cancel all unilateral measures on China, as in bring down all those unnecessary tariffs. All those unnecessary tariffs. So, and don't forget, we've discussed this before. I mean, it looks like, you know, one of them are both waiting for each other to ask them out on a date. It looks like that. That's the sort of game they're playing. Oh, well, no, I'll wait for them to ask me before I do anything. Or they'll ask me because they like to say the White House again. These are mixed messages which we're getting. They're saying the White House is waiting for Beijing to call them before they can start talking. And China says, well, we're not going to start talking, doing any trade negotiations till you show us a little bit of respect. So, though, like I said, we had a little bit of hope over the last 48 hours, there were signs that we might be, again, having a US president who cares what the stock market is doing. the little ray of hope again that, this trade war can be diffused. We're close, but really no cigar. And here's the other reality as well we need to bear in mind. The current tariffs still exist. 145% on China. China on the US, 125%. US on imported cars, 25%. US on Canada, 25%, includes automobiles and light cargo trucks. 25% on steel and aluminium from all countries. And 10% baseline on all countries. So that has not changed. That has not gone away. So that's the reality. Sometimes reality bites. But anyway, let's have a quick look at the market, see how the market is doing so far in the session, because the US has opened up, 45 minutes ago or so. So this is obviously the S&P, like I say, we had a very positive couple of 48 hours. Again, it's not, like I say, dramatically declining. It's only 45 minutes. It's on a 30-minute chart, of course. But again, after all that euphoria and excitement, it is stumbled. Same with the NASDAQ. Okay, slightly up, but not the excitement we've seen over the last couple of trading sessions. We can see this again with gold, okay, which is back off. We go on the dailies on a daily. This is really interesting. So I'm really fascinated with gold. Gold obviously was under pressure over the last 48 hours because there was hope. But today it's back off the lows. Nowhere, not really close to the highs it saw on Monday. That's to the Trump versus Powell TV show. But yeah, again, it's still off the lows. It's going to be trading at $3,309, which again goes to show there's still that uncertainty, which means that safe haven status of the yellow metal is still very much in play. Same with currencies as well. The dollar was having the best rally in 2 weeks, but again, it's down slightly again today. The euro is back up, challenging it 113. The British pound 133 as well. So again, the cable is up against it, and we can see this with obviously the dollar yen as well. Off the lows, but what the pressure was around 140 a little while back, but it's still slightly down for the day so far. So yeah, so even then, so yes, that's again that little ray of sunshine, a little hope we've had over the last 48 hours. It's sort of slightly diminished. That sort of bubble is being burst a little bit, because like I said before, even if we're getting good news and the market is so trade driven, we still got these existing tariffs. Like 25% of all imported cars, 25% on Canada automobiles and light cargo trucks, 25% on steel and aluminium, 10% baseline on all countries. That's not going away yet. Anyway, I want to move on to something else which is happening today, which is quite important to talk about. And that, of course, is Alphabet, i.e. Google, is what it's called one earnings being released today. One of the big Mag 7. Now, this tech, the big tech giant is expected to reveal more AI-related spending. And though the market is not concerned by this particular earnings report, expecting it to show anything negative, because like I said, don't forget the tariffs have not kicked in yet. What they will be more interested in, what they will be more interested in is the forecast for Q2. What Alphabet says about the Q2 forecast, especially in the world of tariffs, which we now live in. So it's going to be more fascinated by that. Now, this obviously comes out after the closing hour, but this is going to be quite an interesting event to keep an eye on. So bear that in mind. Let's have a quick look at Alphabet, where they are actually, where they're currently trading at the moment. Let's have a quick look at them. There you go. Right. Like I say, they've enjoyed the last 48 hours as well. All of the Mag 7 has, really trading sideways, to be honest, at 127.35. for the day so far during the session. Like I say, this is going to be interesting. Like I say, we won't get it till after the closing bell. But again, it's going to really be the Q2 forecasts, which is going to be really, really fascinating. While we're at it, let's look at the other Mag 7. Tesla getting up slightly to, again, that's boosted yesterday from yesterday's video. Remember we spoke about it? Musk returning back to the office. So that's still giving it a bit of a boost. Meta, again, up slightly. Microsoft, again, up slightly. Amazon, you know, at the moment, all pretty sideways, but all nothing terribly dramatic. We do have economic data coming out. I remember the day when I used to do these shows, I used to do these live broadcasts, and it was all about economic data, NFP, CPI, etc. But nobody's really paying attention to that at the moment. But we have got a couple of things coming up. We have got UK retail sales coming up later in the week, and obviously US consumer sentiment, which will be quite fascinating to keep an eye on. Now, don't forget, these are live shows, of course, so you can ask me questions or talk to me anytime you wish, or share with me your opinion. Let me know your thoughts on what you think. Are we seeing signs that Trump is beginning to care about the market again and what the market's performance says about him? Or are we deluding ourselves again? And as well as that, how close are we to seeing an end to this trade war? You know, well, let me know what your other questions, like what you think, where you think gold's going to close. I still, one thing about, kind of talk about gold in my program all the time because I love gold. I'm a gold trader, I'm a gold bug. You know, we'd probably do a little more segment on that because, you know, every day you get investment banks changing their target. I even saw one target today. I forgot the name of the bank, but we'll talk about it in another video, saying it could go all the way to $4,000 this year. Which, if you said that to me a month ago or 3 weeks ago, I would have thought it was crazy talk. But the fact of the matter is the length of speed we've gone from being hitting 3,000 level and then hitting a high of $3,500 on Monday. I wouldn't necessarily thought that out quite yet. And don't forget, if you're watching me on YouTube and you like this sort of thing, by all means, you know, follow us or subscribe if you like. Hit a notification button so you know next time we're going live. If you like this type of content and you put up with me, by all means, give me one of these. It's nice to know that you like what we do. And the same if you're watching us on X or Twitter. I'm too old to keep up with new names. Follow us if you like and give us a little heart if you don't mind the content. The other thing I like to point out as well, of course, if you're watching the recording on YouTube, which I've noticed a lot of people do, a lot of people might miss the actual live broadcasts, but they go back and watch the live shows, the recorded version of the show, which is great. If you are watching the recording and you have a question or a comment, by all means, put it in the comments below. I will see them and I will reply to them next time I go live on it, which of course will be tomorrow because I go live every day. Anywho, if there is no questions, not a problem. Not a problem. Leaves me to say then, in that case, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.